Hello, viewers. You are all welcome to another exciting, wonderful, enlightening, and educative time on Kukuza Africa. Kukuza Africa is all about changing the African narratives. We're looking at, what people call problems in Africa. All we're just doing is looking at the problems, the challenges, the situations we have, and carefully analyzing them, researching into them, and coming out with adequate policy recommendations, which will be sufficient for policy formulations and implementations across the 46 sub-Saharan African states. And today I'm excited to have a very good friend who is well known in the development circuit, an expert, I would really want to say, in the person of Mr. Godfrey Lord Kwesi Krentil. He is the CEO of the Financial Inclusion Advocacy Center, Kent, in the United Kingdom. They also have a good office here in Ghana. And he's a passionate financial inclusion and development expert. He's who works in the financial sector of Sub-Sahara Africa. He's a financial management consultant. He's a trainer and has worked as a university lecturer at some point in the United Kingdom previously. He develops institutional capacity and in a cross-section of financial establishments with particular emphasis in the microfinance sector. He's actually a microfinance expert, has a very, very great passion for microfinance, and he's carried out various financial management interventions in the sub-region, and we are glad to have him with us today on Kukuza Africa. Actually, it's taken quite a while, for him to come on. It's taken about 2 months, but we're happy to have him here today. Mr. Godfrey, you're welcome, and we're happy to have you on set today. And we know that you're really going to give us a good insight, mostly educative in content that will assist our viewers to understand the concepts of financial inclusion, and particularly your passion, which is microfinance. The whole idea is to change the African narratives from, the doldrums of economic downturns, to, increased and improved human development. You're welcome on our program.
Thank you very much, Say. Thank you.
Yeah.
Thank you for giving me the opportunity, Say.
Right. So, right away, Godfrey, I will say this. The term financial inclusion is more or less a new term, in our financial vocabulary in Sub-Sahara Africa. What is it like exactly when we talk about financial inclusion in the 46 Sub-Saharan African states?
Yes. Well, basically, financial inclusion is a provision of financial services and products to all kinds of adults, or to adults, no matter the person's background, the creed, gender, religion, or whatever. So it's a way of bringing every adult into the financial ecosystem so that each person will have a financial footprint. Saying this is going to help each one of us to be able to, because studies have shown that the higher a country is bankable, the population of the country is bankable, like the developed countries like Australia, UK, US, and Canada, where they have almost about 98% of their population being bankable, having an account at a formalized financial institution. The development of those countries are very high. You can easily,
could you give us the percentage again?
So if we have almost about, in the developed world, we have almost about 98% of their population being bankable.
So 98% in most developed countries have bank accounts.
And therefore we can easily see the sort of development that goes on, socioeconomic development in those countries. Vis-a-vis the Sub-Saharan Africa, where we have just about under 60% of the population having access to what? formalized bank accounts, you see the sort of development we experienced here. You see, so the higher higher the rate of bankability, the higher the development of the nation. Because what happens is that if you have access to formalized bank accounts, all your inflows or all your revenue passes through
The banks.
the banks, and for the matter, the government is able to what get the necessary taxation from the people.
Okay.
When these taxes go to the government, I mean, somebody will come out with an argument that all these kind of taxes are also used by corrupt governments. But at least, if the government are able to, if there aren't much leakage, taxation leakage in the system, the government will definitely be able to use this kind of money generated by these by the individuals, companies, micro and medium enterprises will all have access to what? Finance from the banks. They will become much more formidable. They will generate enough income, employ the teeming unemployed youth in our countries, and each one of us will then be able to also pay taxes to the government. The government will then use this kind of taxation to what? Build the country. See, and that's exactly what happens in the UK and other developed countries. You see, somebody will say that, oh, in the UK, as soon as you get your money, the money goes back into the system. You're not even able to say, because everybody's supposed to what? Pay taxes. Everybody's supposed to pay whatever he or she needs.
Yeah.
You see, and that's how the government is able to use the money to develop the country.
Okay, all right. Now let me. You've given us an insight into what financial inclusion it's all about, and I know that as the chief executive of the Financial Inclusion Advocacy Center in Kent in the UK, you also have a branch in Ghana.
Yeah.
And your office in Ghana, more or less, works very closely with the microfinance systems here, and I believe with some of the regulatory authorities, trying to, bring more people into that dragnet. Now, there is a study by the MFWSA that seems to suggest that out of 590 million adults in Sub-Sahara Africa, the 350 million do not have access to an account at a bank or another type of financial institution. That goes in to support what you just said.
Yeah.
And I think the statistics, are close to, what you put out, a few minutes ago. And then, according to the IFC, it says sound, inclusive, and sustainable financial markets are essential to building shared prosperity and eradicating poverty.
Yeah.
Yet, as many as 2.5 billion adults across the world lack access to financial services such as payments, credits, and saving accounts. Although the small-scale business sector is the engine of growth in many economies, it is estimated that over 200 million micro, small, and medium enterprises have no access to the credit necessary to grow and prosper.
Yeah.
All right? Now, so we're looking at, based on the study by the MFWSA and IFC, what I wonder is, how do the unbanked in Sub-Sahara Africa cope with their financial and transactional demands on a daily basis in these contemporary times? Have the fintechs and the telcos, been able to rise up to the occasion, to provide a platform where the unbanked will have access to payments, to credits, and to saving accounts? Because what we're looking at essentially is that they are outside the immediate dragnet, of the proper banking sector, in quotes. So how do these micro businesses in Sub-Sahara Africa, how do they cope in the current circumstances?
Okay. Yes. I like the statistics from the IFC and also the MFWSA. It's indeed a big problem in Africa or the third world, or I won't say third world countries, but in developing countries. Yes, for micro, small, medium enterprises having access to credits. Same. But let me take you back a bit. Financial inclusion actually came just after it became much more. It became a buzzword from 2012 up to 2015 when 2015, just at the ending of the Millennium Development Goals. It's when financial inclusion came. It came because microfinance has done a wonderful work. Microfinance can be seen as one of the most potent developmental tools for African countries or developing countries for them to be able to develop organically.
Okay.
It's a private-led initiative. Microfinance is a private-led initiative whereby somebody gives money to an enterprise or entrepreneur, small entrepreneur, and the person is supposed to pay the money back to the lender.
Yeah.
And it's a win-win situation.
Yeah.
Is
that what we call the susu?
The susu started with susu.
Yeah.
Merry-go-round. It has different
in
names.
In South Africa, it's called the Stokvel.
Exactly.
Yeah.
It has various names. But so microfinance started and became formalized in the 70s, led by the visionary leader, Professor Muhammad Yunus, when he built up his... actually, Professor Yunus in 1976 only gave $42 to... $27 to 42 women. And these women were able to use the $27 to do their business. And over the 1 year, they were able to make some profit out of it. And that gave an insight that, it means that microfinance or giving money to the poor, it's sustainable.
Okay.
Giving money to the poor is sustainable, it's lucrative, and also it empowers them to also come out of poverty. So in 2005, 2006, and because of this, so most nations or developing countries started bringing out or developing microfinance concepts, microfinance policies for them to be able to give money to the bank and those who are actually being denied financial assistance from the banks. So in 2005, I think the World Bank, the United Nations, took 2005 to be the year of microfinance. In 2006, Professor Yunus won the Nobel Prize for championing the cause of the poor.
That is using the microfinance
concept, yes.
Concept.
Yeah.
Now,
yeah.
let me just come in at this point, Godfrey. You need to educate us on Kukuza Africa and our viewers at large. What actually constitutes financial inclusion?
Very good.
Microfinance, from what I gather, is one aspect of financial inclusion.
Yeah.
And so we just want to assume at this sitting that, we want to first, understand what the financial inclusion products will be like. So if you could just give us a breakdown of what those lists could be, and from what you're saying, the microfinance is one of it.
Yeah.
So
it's just a vehicle.
Yes, it's one of okay.
So microfinance is a vehicle. Microfinance is a formalized financial institution which offers financial service and products, all kinds of financial service and products to people at the lower part of the economic pyramid.
Which is more or less like an improvement from our local collection methods.
Exactly.
Great.
You see, so microfinance is not like going to local lender.
Okay.
Whose interest rate is always almost about 200%.
Outrageous.
That's very, very outrageous. So, and the people at the lower part of the economic pyramid have come to realize that as long as the microfinance rate of interest is not more than the local lender, they will continuously go to the microfinance to get money to expand their small businesses.
Yeah.
You see, and if anybody is doing microfinance and is doing it properly, his recovery rate shouldn't go below 98%.
Great. Now let me take you back a bit.
Yeah.
In talking about financial inclusion, on Kukuza Africa, one of the our mandate is to more or less research, do investigations into, the various socio-economic models, possible for Sub-Sahara Africa, and where necessary, make recommendations, for policy formulation, policy guidelines, and implementation. The reason why we really want to know the entire gamut of financial inclusion is, it's going to give us more or less a foundational basis, Like you said, the buzzword, actually started at 2012, which understandably, came as a result of a particular effort to, start the microfinance scheme and all that. But you see, beyond that, there definitely must be other constituents that make up, what financial inclusion is all about. Or is financial inclusion solely microfinance, or there are other products, which make up financial inclusion?
Of course, yes. So what it is, just at the ending of the Millennium Development Goals 2015, when it came to an end, and they did an evaluation by the UN, they found out that microfinance has done its best in cutting down poverty. You see, but microfinance is not for everyone. Microfinance is actually for the enterprising, or I would say, microfinance is for it's for those who are actually into business at the lower level of the economic pyramid. The enterprising people who are actually into some sort of business already. So microfinance is not for somebody who is just about to start a business. So people who are already have something going. You see. So when UN getting to 2015, they said, okay, fine. If microfinance is not for everybody at the lower level of the economic pyramid, then we must have something that will bring everybody into the economic ecosystem.
Yeah.
You see, that gave the bait of financial inclusion.
Great.
So they said that, okay, we're going to have 15 years to do this. So 2015 to 2030 is the goal for financial inclusion, that by 2030, we should have everybody in this world should be able to have some imprint.
A financial footprint.
Footprint in the financial system of every country.
And how would that come about?
Very good. So microfinance is one
actually,
of it. With a
can you give us the others?
Yeah, with the 2030 agenda, financial inclusion, we have the first one as no poverty.
No poverty.
Yes, as one of the pillars. So we have 17 pillars, just like in the Millennium Development Goal, we have 15 pillars.
Yeah.
With the strategic development goals, we have 17 pillars, and number one is no poverty by 2030.
Yeah.
And one of the when you go to pillar 1.13, talks about financial inclusion.
Okay.
That is a financial by 2030. Every adult must be able to have a financial footprint in the financial ecosystem of every country.
All right.
See, and financial inclusion is not only about microfinance. Financial inclusion also encompasses financial literacy.
Okay.
Because if the person is going to have financial imprint, then the person must also be what? Schooled or educated on the essence of having an account, the essence of what? Managing the account,
Okay.
the essence of knowing what is good and what is not good for him to work. Because when you go to a country like Kenya, there are lots of people who are into debt in Kenya, all because of what? The advent of microfinance and then also the fintechs, where the fintechs are pushing people with what? Money. And they are not able to repay the money.
I'm aware. I'm very much aware of the Kenyan situation. And you know something, viewers, we'll just take a breather and for just a short while. We'll be back shortly. Thank you. Hello, viewers. You're welcome back to our very important discussion with Mr. Godfrey Lord Kwesi Krentel, the CEO of the Financial Inclusion Advocacy Center in Kent, United Kingdom. He was giving us the various aspects of financial inclusion, and I will want him to continue from where he got stopped.
Yeah, thank you, River. Yeah, so microfinance is one of the medium stroke which we would be able to achieve the financial inclusion agenda 2030. And then we have fintechs as well. Fintech is also playing a very pivotal role in bringing people into the financial ecosystem in the developing countries.
Yeah, and by the fintechs you mean?
Yeah, financial technology companies.
Great.
Whereby they combine or they bring finance and technology
together.
And that is actually helping a lot of people to nowadays save some monies and also receive money easily.
Yeah.
And I think one of the
can you give us an example of one of the
champions
most prominent fintechs in Sub-Sahara Africa?
Okay, the one developed by Safaricom and also Safaricom.
That's in Kenya?
In Kenya, M-Pesa. And actually, M-Pesa has been replicated in various countries. So when you go to Pakistan, we have what's the name? We have the B-Cash in Bangladesh. We have C-Cash in Pakistan. So all these were what?
Do we have any such types in Ghana?
With Ghana, we have the various telcos having their own mobile money applications.
So we're looking at the MTN.
MTN having their Momo.
Right.
We have the Vodafone Cash. We have the Airtel Cash.
All these are fintechs.
Fintechs.
Great.
Yes, mobile money.
Right.
Yes, applications. Apart from the telcos as well, we have smaller financial technological companies.
Okay.
You see, like for instance in Ghana, we have the ZPay. We have the ZPay. We have various little.
Most of those companies, they have payment platforms on which people can pay for goods and services by card.
Exactly.
On particular websites. Great.
Yeah. You go to Zimbabwe, they have the Eco Cash, which is doing very well because with the Eco Cash in Zimbabwe, which is well developed, you can actually have a card that you can use it to withdraw money and also use it to also do purchases. You see. You go on to I think Nigeria, and some parts of West Africa, for instance, when you go to Freetown, for instance, they also have this kind of Momo and then mobile money concept where people are using it effectively to get money from their people and also use it to purchase stuff. And it's all helping people to get that kind of financial imprint. However, with all these kind of fintechs, and it's always on one leg, which is very dangerous because there's nothing like savings. So are we actually achieving the financial inclusion agenda or not? Because somebody sends you money through actually, the concept of the M-Pesa in Kenya started with people in the various cities, sending money back to their family members in the villages. That's how it all started. So it became much more worse when you send money through a car going to a village to send it to your parent, the old parent, and then the driver doesn't take the money back. You see, and then this came as what? The M-Pesa came and people started using it, which became very effective. The cost of transferring money from one end to another became much more cheaper and stuff like that. But the question is, are they actually saving on using it to save?
Yeah.
Because savings is the money that will definitely be used to give to this micro enterprise for them to be able to develop and expand their businesses in order for them to employ more people.
Yeah. Godfrey, let me stop you for a moment, and for the purposes of clarity, that our viewers might get a good understanding of what financial inclusion is all about. You've mentioned a few drawbacks now, talking about the fact that some of the services are not avenues or products with which you can save. And you made particular reference to what we will call the MOMO here, the kind of transfers like the M-Pesas, and all that in Kenya and the rest of it. Which brings me to, something, you almost took a question out of my mouth. But I'm still going to ask you that question for the basis of clarity. From the understanding I get, from what you've said so far, financial inclusion stands on several legs. One of it is the microfinance system. The microfinance system, I believe, is like the banking system, but a less formal approach, so to say, and the participants could also have savings within that system. Is that possible?
Yeah.
Within the microfinance system.
Microfinance is supposed to offer financial services.
Good.
Yeah.
Like the regular banks will do.
Of
maybe
course,
to just a particular threshold.
At the micro level.
At the micro level, fine. So what we are looking at now is, we are looking at a situation where an important aspect of financial inclusion, which we'll call mobile money, like we say again, the MOMO, the M-Pesas, and all that, actually since 2014, the Sub-Saharan sub-region big financial inclusion gains have been driven mostly by mobile money. All right? I mean, not what you call the old school brick and mortar banks. For example, in Cote d'Ivoire and Uganda, mobile money penetration rose while bank account ownership, was mostly flat. So there's not a significant, rise in bank account ownership in these countries, in spite of the fact that a lot of people came into the dragnet through the mobile money. All right? Now, 3 years ago in Senegal, only 6% of adults had a mobile money account. Today, the share is 32%. Such a huge leap. In spite of that leap, into the financial inclusion circles, we still have a situation where the bank account ownership in Senegal is still flat, has not risen in comparative terms. Now, look at this. What does this portend for issues such as emergencies and aspects of traditional banking, such as savings and loans and credits? Because a Momo company or a mobile money account, cannot more or less give me the kind of credits or, give me savings appreciations, even if I have a huge amount of money in my wallet, which I leave untouched for a very long time. There are no provisions to add some kind of savings premium to it. So that's a big challenge. So it means I'm giving monies to the mobile company without getting a commensurate improvement on what I'm doing. So it means savings are practically non-existent amongst, the mobile companies. Then when you talk about emergencies, I don't know how much of credit these companies are ready to give, to their participants, their adherents, or people who hold mobile money accounts. So for me, this is the challenge. There is a huge drive, and it's quite huge across Sub-Sahara Africa, to get people, included in the financial footprint of the socio-economic landscape of Sub-Sahara Africa. And they've come in droves. You look at Senegal, which has risen from 6% to 32% in 3 years. That's a huge number of the populace. But who are not going to get the benefits of the traditional banking system? As I said, we understand that the microfinance system itself, could provide some of these benefits, of savings, getting premiums, of credits, even getting money in emergencies. But when we now come to the mobile money companies, around, especially by the telcos, we don't get those benefits.
Of course.
And these are a huge amount of persons, within the financial footprint of our various economies. What would you think would be the proper resolution of these kind of conditions which we have currently in the system?
Yeah, I believe, and I think it's something that we've been doing a lot of advocacy on at the moment, whereby policymakers have to actually come out with, I know most African countries already have their financial inclusion strategies, and they are developed in their implementation stage. So the first is for them to be able to encourage people to have access to financial intermediation or financial services and products.
Right.
Once the people are now hooked onto it, then there should be some sort of policy to divert this kind of zeal into proper savings. And that's why financial literacy campaigns is so important. You go to countries like Uganda, Kenya, Tanzania, the Eastern African countries, there is a lot of financial education going on.
Yeah.
Financial literacy going on. This is a way of educating the people at the lower bottom of the economic pyramid to have a sense of savings. You see. And even in this, in Ghana, for instance, at the moment, I think the central bank has made it in such a way that the telcos are supposed to add interest on your balance at the end of every month. And I think it's one of the few countries in Sub-Saharan Africa which is doing that.
Great. Has it been implemented?
Oh yes,
is it working?
Been implemented. It's working. It's working. So at the end of every month, depending upon your balance, they add a small interest. It's not that much, but then it's something that has started. So I believe the policymakers are going to encourage it and then also make it much more better.
So where will the telcos get the money from which they are going to add interest to people's supposed savings?
The telcos have this huge amount of money that they are also using it for their own because definitely they save these monies at the various banks and they're getting a lot of interest on these kind of monies. They also will charge fees.
You know something, Godfrey?
Yeah.
As I said to you at the onset, at Kukuza Africa, we are interested in improvement in policy.
Of course.
We quite understand that when concepts start, innovation start,
Yeah.
there's room for improvement.
Of course,
and that
yeah.
we take, as a necessary part of development.
Yeah.
As we sit here, I honestly think that the stage at which the telcos have reached
Yeah.
in mobilizing monies from the populace,
Yeah.
they should be allowed to open banks. Because what they're doing essentially is a very strategic aspect of banking, which involves transfers of huge sums of money.
Of course, yeah.
Having access to monies at those levels, I think that what the governments of the various sub-Saharan African countries should be looking at today is not stifling the growth of this very laudable initiative of including people in the dragnet of financial inclusion, but rather to give banking licenses to the telcos. It's as simple as that. So that the telcos can separate that operation from, their normal day-to-day call and
Data. The calls and the data.
the data and the rest of it.
Yeah.
I would like to know your views on that.
Yeah, that's very true. And I will also recommend Bank of Ghana as one of the main central banks in Africa, which has actually been able to ask the telcos to diversify or divest their mobile money business from their core business of selling call and data operations. So when it comes to Ghana, for instance, the what's the name? The MTN money is now a distinct company from the other aspect of selling their calls and non-data operations. You see. And by giving them a license to operate as their financial, or the Momo aspect is now a financial financial company. You see. But when you go to other countries, it's not like that, it's still the same. And which I believe most policymakers and also central bankers need to engage these fintechs or telcos to break away from their core business so that they become standalone businesses. When they become standalone business, what they're going to do is they will be able to take steps towards pay interest and also engage in other serious financial intermediation, which will go a long way to help the people at the lower bottom of the economic pyramid. You see? Yeah.
So bottom line,
Yeah.
what would advise governments to do in Sub-Saharan Africa?
Yeah, I believe that's the way the sort of business these telcos are doing at the moment. They need a license, as you said, to operate as a financial company.
Yeah.
Just like a bank. However, there should be some sort of regulatory frameworks which will be a bit stringent for them. Because if you look at, there's a serious digital divide among the population as well.
Okay.
You see, because it's not just about sending money or somebody sending you money and then taking the money out of your wallet. There are a lot of corrupt deals going on all over Africa, especially in Uganda, Kenya, and many other countries.
When you say corrupt deals in which area?
Yeah, in the mobile money industry.
All right.
Whereby poor customers are losing lots of money.
Okay.
Because
so that
of
is
the
due
inability.
that is due to lax regulation.
Exactly. I won't even say lack of regulation, but the inability of the people to read and understand. You see, so they take their mobile phone to the agent on the streets.
Yeah.
The agent tells you that, oh, your son or daughter sent you $50.
Yeah.
Meanwhile, it was $150 that Stan
But the
sent
same
you.
things happen in the regular banks. So
See.
I don't think that this is
But it's
this
much
is
more
this is exclusive to
the
to the
fintechs, but
to,
then
to
it's
the
much
fintechs.
more. It's more pronounced in the fintech and the mobile money industry, all because of the digital divide. People are not able to understand it, and we've been advocating that for people to get more. I mean, for these corrupt deals to stop, there should be an advent of what voice voice operated mobile phones for our illiterate mothers and fathers
Yeah,
and siblings
in
who
the
are
rural
in
areas.
for them to be able to what do or operate the mobile phone in such a way that nobody would then be able to what steal from them.
Let me stop you at this moment
Yeah.
and ask you something very, very crucial. Payment platforms
Yeah.
are the essential part of the fintech's application.
Yeah, exactly.
And it's really, really laudable and very helpful to African businesses to find out that we have our local fintech guys, creating payment platforms with which we can interact with one another, paying for goods and services, across the Sub-Saharan, African region. At least I'm aware of, quite a couple of payment platforms that have been used successfully to pay for goods and services within Sub-Saharan Africa, which actually originated from within this region. I'm saying that, with some sense of relief and joy, because it has broadened the net, to the extent that, in trying to procure services and goods from other Sub-Saharan African countries, there were little or no platforms to do that in times past. But currently, we now have, companies, from across, from Ghana, from Nigeria, from Kenya, whose platforms can be used to safely, transact businesses. And I think that is, a great thing for us, to develop our economies. However, do you think that this, what we have currently, is sufficient? Because I'm aware that in certain countries, we hardly have up to 2 or 3 strong payment platforms that you can rely on, which you can, insert on your website and use to get payments, from your customers, all around the sub-region. Where do you think we are?
Yeah, with the payment platforms, I know it's catching up. It's actually catching up a lot in various countries, especially when you go to Kenya, Uganda, and you come down to Ghana, Nigeria.
Yeah.
It's really catching up to the extent that these fintechs are now being even, when they come to Ghana, there's now a new regulation restricting how many fintechs can operate within the country. I think they made it, I've forgotten the number of fintechs which are now allowed. There are lots of mushroom platforms in the system. If care is not taken, they will just be taking people's money and running away with it. You see, so it's not just about mushrooming of the platform, but how effective the regulatory and policy makers, regulatory bodies and policy makers are able to come out with proper regulations.
You know what, Godfrey, we're about to go on another break.
Okay.
But I just want to say something about that.
Yeah.
I think very concisely that as many payment platforms as can be formed should come on the system. It behoves on the authorities to regulate it.
Of course.
Because the more of such platforms we have, the easier it's going to be to do business across the sub-region.
Yeah.
One of the biggest hindrances we have today is the fact that our inter-country trade in sub-Saharan Africa is nothing to write home about. And
That's
part of
very
that
true.
is because you cannot be here in Ghana and effectively pay for products from Nigeria. Or you cannot be in Nigeria and effectively pay for products from Kenya. You know, I mean, because a lot of companies don't have websites. Even when they do have websites, they don't have payment platforms. So we see a situation where our goods and services are just inventory. They're just locked up in our warehouses. And these things are not being sold for the simple reason that we don't have payment platforms, you know, that, you know, are seamless, so to say. So I think that what government should do is to encourage, to a very large extent, the establishment of more fintechs. There should be no cap to, you know, the number of fintechs in the system. It behoves on the governments of Sub-Sahara Africa to regulate those fintechs and ensure that they keep to the laws and the regulations of the country, to the extent that they will provide the platforms for, you know, for businesses, you know, to grow and to blossom. Godfrey, I can sit here in Ghana and order a birthday cake for you in Kent.
Of course.
To be delivered to your residence.
Yeah.
Everything. You get everything. I don't need to move from my table.
No.
I just use my card. So, you know, that is where we should aspire to get to. Those are the things that make businesses to run. You know, so we don't advocate that we should break down the neck of any new entrants into the business, but rather to give them an opportunity, you know, to prosper, to blossom, and make Sub-Sahara Africa a destination of business. Viewers, we just go on a short break, and we'll be back with Godfrey shortly. Thank you. Hello, viewers. You're welcome back to this very exciting time out on Kokuza Africa with Godfrey Krentil, the Chief Executive Officer of the Financial Inclusion Advocacy Center, Kent, in the UK. It's been very enlightening speaking with him today. And we have just been able to look at very, very cogent areas of financial inclusion in the 46 sub-Saharan African states. It will be good at this point in time to understand, you know, what and how our ID systems affect the rollout of financial inclusion. So, Godfrey, I just want to, you know, put this question to you because I guess it's a common issue. We all encounter it every day, you know, on this part. And that is talking about our ID systems, talking about our addresses, you know, talking about how easy or how difficult it is to trace, you know, different people as and when you need them. From what I gather or what I understand, you know, so far in our discussion, the whole idea behind financial inclusion is to draw in as many people as possible into the dragnet, you know, to give everyone a sufficient financial footprint, you know, in our financial landscape. However, we find a situation where the ID systems, that is the identification systems, addresses, and the rest, you know, of what you can use to easily verify a person, you know, are not very easy to come by on this part. How does this, in effect, you know, affect the whole process of financial inclusion?
Yeah, thank you for the question. Yeah, ID system helps a lot in terms of the banks opening their doors to people to open an account because as part of the regulatory framework or the various central banks, KYC is very, very important in every financial institution. And we all know that as part of the KYC, you must have a very good ID. See, but it's not, ID systems is not too effective in most African countries. A country like Ghana, for instance, is now coming out with their, I think they've done almost all the they've done it for all the population, isn't it, as at now, where they are bringing out the new Ghana card.
Yeah.
So, and this is going to go a very long way to help people to open an account and have have access to financial services and products. The importance of ID can never be overemphasized. It's very pivotal. If you're going to achieve financial inclusion, Agenda 2030, then definitely we need to work. Each country, as part of their strategy, must come out with their own way of identifying their citizens. I know Nigeria, a few years ago, had their BVN.
Yeah.
That without the BVN, you can never open an account anywhere in the country.
The bank verification number.
Yeah, the bank verification number, which has gone a very long way to let people have access to financial services and products. You see. Same way with, I think, Rwanda. When you go to Zambia, Rwanda has done a very good job in terms of what identification, that everybody in the country has at least a national passport or a local ID system.
Yeah, but let me ask you this,
yes.
Godfrey. Is a national passport not enough as an identification? I mean, why do we have to do multiple identification numbers? Because you rightly said Nigeria is doing has done the BVN for the banks. They've done the NIN, supposedly for the mobile lines. I mean, why this multiplicity of identification numbers? Is a national passport not sufficient, or the driving license? I mean, what else really should we be looking at?
Oh yes, the national passport should be ideal. However, how many of the population will have national passport? National passport is supposed to be helping you to travel outside the country. You see, so few members of the population will definitely have access to the national passport. What about, have you forgotten about the people at the lower bottom of the economic pyramid who are not even literate? How are they going to get access to national passport?
Okay.
So there is the demand for a local national documentation.
Like the national ID card.
Like a national ID card.
Yes.
Which Ghana is doing at the moment. Then I think with Ghanaian situation, they are trying to use the Ghana number, combine the Ghana number and also what's the name? The Ghana number should go hand in hand with your TIN or the, what's the name?
Your tax identification number?
Tax identification number. So
now, does everybody have a TIN number? Does everybody have a tax identification number?
They've given out a window that within the before that window closes, you must have your TIN. Otherwise, you will not be able to open an account.
Okay.
You see, so they are doing this hand in hand. So at the end of I think by April, I think they said that by April this year, they should have the TIN number to go with your Ghana card number. So without this, you'll not be able to open an account or have any sort of financial access to any financial service and products. And it's going to help a lot in terms of government also. What's the name? Government also restricting the leakage of taxation. It will bring a lot of what's the name? A lot of improvements, or it will bring a lot of benefit to the people in the country. Because once you have the national ID, you have the TIN number, things become much more easy for you to be able to access certain public services.
Yeah.
You see, so it's going to be a win-win situation for the people.
Okay.
Yeah.
Okay.
Yeah. But ID is very important in meeting the financial inclusion agenda 2030.
Okay.
Yeah.
Now I asked that against the backdrop of the experiences of the financial institutions. In some cases where they extend credits to certain persons or have transactions, and at the end of the day, they can hardly trace those people anymore.
Oh, yes.
And for one reason or the other. And then when you look at our street identification systems also, in most countries in Sub-Sahara Africa, the streets are either not planned or properly named or numbered.
Yeah.
And so for that reason, it's also a Herculean task for the operators of the financial system to follow up on credits.
Very good.
In cases where credits go bad, and the rest of it. So I think that a more robust method of identification, which can more or less take right from source every person in Sub-Sahara Africa, every person in our various countries, into an identification net right from source. I think that would, portend, a better result for us, across the sub-region than, either waiting for people to walk up to you to do that. And my suggestion is this, is that using the average census method, because the census is one of the most far-reaching attempts of meeting every person that lives in a country. So as long as we are able to have periodic census, I think that it should be the same procedure, where they go maybe with biometric machines and the rest of it, and you take down the particulars of the people, you take their fingerprints, you do, whatever records you want to do, and at that moment, immediately generate a national identification number for them. Because in most cases, as we have observed across Sub-Sahara Africa, when you ask people to come forward, to take identification for specific things and the rest of it, you hardly get, a sufficient number of the population coming forward. So then, when issues, of identification challenges come up with the financial establishments, we virtually don't know what to do. So, just over the top of my head, I would say a very simple and common sense approach to solving our identification crisis in Sub-Saharan Africa is to do it at the census level. And if we go prepared, to our various households, in the process of counting, I'm sure that, we should be able to get, the larger number of persons, who would, come into that dragnet immediately. Because at the census level, you're able to know who is a foreigner and who is a native of the country, because all this information, is given, at the period of collation and the rest of it. So, give and take. I really don't think that, getting our identification right is rocket science. I think it's as simple as, working at the grassroots.
Most African countries are actually embarking on serious, they're embarking on various strategies of bringing their people together in terms of identification. To the level of the Western world. Most African countries are now, that's their plan. That's what they invested themselves to do. Yes. When you talk about inability of customers to repay their loans, for instance, apart from the IDs, we also have, most countries nowadays have credit bureaus.
Okay.
So the credit bureaus are able to tell, as part of the credit appraisal, are able to tell the lender that this person
is credit worthy or not, or what level he or she is.
Very good.
Do we have that in Sub-Saharan Africa?
Yes, a lot.
In which
in
countries?
Ghana, for instance, we have about three different credit bureaus in the country operating at the moment, and it's part of the Bank of Ghana regulatory framework that before you give any facility, you must consult
the credit bureau.
Yes, so it's part of the returns to be sent to Bank of Ghana, the central bank at the end of every month. Same with Nigeria. Most African countries have credit bureaus at the moment.
Right. But you will agree with me that we are talking about the upper echelon of society. In most cases, you are looking at salaried workers, people who are doing well in business. Those are the people that can be easily assessed by the credit bureaus. Or what do you think?
No,
do you think
in the UK, in Ghana,
yeah,
it's for every, even microfinance institutions are supposed to have at least one of these. Microfinance and rural banks are supposed to have one of these 3 credit bureaus that they work with.
So by what criteria will they determine that the trotro driver or the trotro mate is credit worthy or not?
Okay. So I believe that before the credit officers will make their informed decision, they will consider whether the person has a
previous loans,
previous loans, or has any unpaid or paid, or whether the person has a financial footprint.
Yeah.
You see, if the person doesn't have a financial footprint, then one way most of the microfinance institutions do is try to help the person to save with them for about 6 weeks,
for a period of time,
for them to know the person, know where. And you shouldn't forget that microfinance institution is a doorstep provision of financial services.
Okay.
So they come to your door, so they know that the project officer or the credit officer or the microfinance institution should know where you live, your door number and everything. So it's not a way. It's just something that the person will run away. You get what I mean?
Yeah.
Because the person sees you almost every day. Yeah. In terms of recoveries or collections and stuff like that.
Yeah, in the microfinance system, definitely the operators are closer to the people. Exactly. Much more than in the traditional banking system.
Traditional banks where the elites save and want facilities. They also, most often than not, they do their robust appraisal systems and also depend on the credit bureaus to make their informed decisions.
Let's look at this very quickly. Do you foresee that the mobile money penetration and financial inclusion within the sub-Saharan African states would likely face serious challenges from the avalanche of rapidly evolving digital transformation, AI, computing, and the rise of Internet of Things, 5 Cloud, and 5G and the rest of it? Do you think this can give criminals the leverage to disrupt effective financial intermediation, given the poor infrastructure and sometimes policy mishaps?
I'm thinking the other way around, rather, that the AI is actually going to be pivotal in changing the dynamics in the financial inclusion industry. There's going to be a paradigm shift, serious paradigm shift with the advent of AI, the 5G and stuff like that. It's actually going to inure to the benefit of people getting financial presence in the ecosystem. Yeah. You see, things are going to be much more easier, and especially during this COVID era has shown us that you can't simply be moving to the financial institutions. Rather, things are going to be done remotely.
So more or less what you are looking at, what you are saying essentially is that the system is going to be more efficient.
Efficient, much more robust.
And you really don't think that there will be room for abuse?
It also depends on the regulators.
Okay.
Yes, it depends on the regulators. You see, it depends on the regulator, how the regulatory framework is going to be sewn. Yeah. To help curb all this kind of definitely there will be some sort of mishaps. Yeah. But it depends upon the regulators towards nip it in the bud. Yeah. And then let it grow. Yeah.
Yeah. So I mean, in that state, we will be looking at specific companies like RegTex. We're going to be looking at a situation where the RegTex.
In fact, some serious central banks have already started using RegTex. You see, the RegTex are regulatory technological tools.
You're right.
You see, and it's become so much in need at this particular moment during this pandemic that compliance and supervisors of central bank can't just walk into a microfinance or any bank for supervision and regulatory compliance issues or even going to do on-site visits, going on on-site visits. They can't go because of this COVID, but that doesn't mean the regulators shouldn't also do their compliance stuff. You see, so RegTech has become very, very important now. That you sit in your office as a compliance officer or supervisor in the central bank.
Yeah.
You sit at your office and then demand what information from these financial institutions for you to analyze it properly using
where they are.
Yes, regulatory technological tools.
Right.
There are a lot of tools that comes with it,
Right.
and they need to get trainings on how to actually do offsite visits.
Okay.
Instead of going on site, you have to do offsite because this pandemic doesn't know whether you are from a central bank or you are at the microfinance level.
So you should be able to use your systems to
do
thoroughly
yes,
investigate
exactly,
from the information available
remotely.
Yeah, remotely.
Yes.
That's
so
great.
that because they are not going on site, it doesn't affect the systemic. It doesn't cause any systemic problems to the financial systems here.
Okay. All right. Viewers, we'll just take another short break and we'll give Godfrey another breather. When we come back, we're going to really put him in the center. He is going to tell us quite a few things about, what the Financial Inclusion Advocacy Center is really about, and his own recommendations of policy across Sub-Sahara Africa. Thank you. Hello viewers, welcome back from our short break, and we're continuing with Mr. Godfrey Krentil of the Financial Inclusion Advocacy Center, Kent in the UK. We're just going to do a very quick one to round up. Godfrey,
Yes,
as a financial inclusion specialist and trainer working in Sub-Sahara Africa, what will you consider as the level of policy options and innovations to make financial services more accessible to the unbanked Sub-Saharan African and to empower policymakers to increase access to quality financial services for the poorest populations in Sub-Saharan Africa? And by this question, I'm directly addressing your role as the Chief Executive Officer of the Financial Inclusion Advocacy Center.
Great, thank you. So at Financial Inclusion Advocacy Center, what we've been doing over the past 7 years is helping national government and financial institutions in capacity building to meet the demands of bring innovations into the access to financial services and products. We've also been helping national policymakers and regulators in small African countries in strategizing helping them to draft and also helping them also to come out with the financial inclusion strategies in their various countries, and also help them in terms of implementation and evaluation. We've been working with, we've been doing a lot of work with Nigerian, the Central Bank of Nigeria in terms of capacity building of their financial inclusion department. Same with Sierra Leone. We've done a lot of work with, we've done some work with in terms of capacity building of the Ministry of Finance and the Central Bank of Zambia, and many other countries. One of our biggest clients, for instance, in terms of financial inclusion, microfinance development, is the Bank of Indonesia, whereby we've been there. They also come to us a lot for capacity building and also innovations in the financial inclusion industry. Yeah. So that's what we've been doing. So we've been helping the policymakers to come out with real innovations in how they will be able to help people access financial service at the lower level of the economic pyramid. Yep. Yes.
Yeah. So, given your involvement in the sector, how would you say the sector has fared?
Oh, the sector before the COVID was doing very well because from 2012, whereby in Africa we have just over 24% of the population having access to formal financial institutions. It jumped to somewhere up to over 6 years, up to 2018. It jumped to somewhere about 54% of the population in Sub-Saharan Africa having access to formal financial services, having access to financial service from formal financial institutions like the banks, microfinance institutions, and stuff like that. So there's been a lot of change in access to finance in Africa over the past 6 years. Yeah.
How does the average microfinance institution start and operate?
Okay. For an average microfinance institution to start means that they have to meet all the various criteria set by the central banks or the agency in charge of microfinance in that particular country. So when I talk about criteria, we're looking at the minimum capital requirements, we're looking at the staffing, we're looking at the board level, we look at, I would say, governance, we're looking at the IT systems and stuff like that. You should be able to meet all this kind of what.
Where does the money come from to set up a microfinance institution?
It could come from the promoters of the microfinance institution. When I talk about the promoters, it could be probably the owners of the microfinance institution, or from the international organizations who are coming to help a certain part of the country's poor people. So we see that to be a project.
By law, a microfinance institution does not take deposits from the public, do they?
It depends upon the country's regulatory framework.
Okay.
When it comes to Ghana, for instance, microfinance institutions can take deposit and also give out credits.
Okay.
Yes. When you go to a country like Nigeria, it all depends upon the definition the central bank has given to the microfinance.
Okay.
In Nigeria, we have the microfinance banks, which are allowed to take deposit and also give out credit, plus other financial services and products like microinsurance and stuff like that. Whilst when it comes to Ghana, and then microfinance institutions in Nigeria are only institutions. They are not supposed to take deposits.
Deposits from members of the public.
Exactly.
So how do they get their money to operate?
From the owners of the institution and also from borrowing from other sources.
Okay. So they are allowed to give out their monies at an interest rate?
Yeah.
Okay. And then recoup that money.
Exactly.
So ordinarily they make their income from the spread of the interest rates.
Of course.
Are
plus other fees and charges.
Okay. Are there agencies or donor organizations that assist microfinance institutions to set up?
Yes.
Okay.
They are.
Okay.
They are. But it's actually drying up. You don't nowadays see NGOs or donor institutions help microfinance to set up nowadays. It's not that.
The reason why I ask this is because microfinance, by its setup, is basically in most cases, for the lower end of the stratum.
Yeah.
And we find a situation where most of them actually get involved in agric businesses, small scale trading, and the rest like. And these are sectors which I will put it, the non-profit organizations are also interested in assisting in one form or the other. So what I'm asking basically is are there opportunities or instances where international donor groups, provide grants or some form of, financial assistance for the takeoff of microfinance institutions?
Yes, if the donor organization thinks that there is a need in a particular part of the country for them to help in elevating them from a certain level to another level, definitely they can do it. In Ghana, for instance, I don't think at the moment there are more than 5 financial NGOs in the country.
Okay.
You see, because most clients or customers see financial NGOs as a way of taking their monies and not repaying.
Now let's look at it.
So,
but do we have international bodies out there, who will be ready to assist African MFIs, to get properly established, taking into consideration the fact that they are actually lending to the lower stratum of society?
Yeah. When you talk about helping them to start, are you talking about giving them some funding?
Yes, basically funding.
You see, that aspect has actually dried up big time. So what it is, microfinance institutions, when they started way back about 20 years ago, microfinance institutions were all the time enjoying some sort of donation from international funding organizations.
Yeah.
Is it, but for how long will you be
depend on foreign?
Yes.
Yeah. When you can also you can raise money locally.
Yes.
Yeah.
It's not sustainable.
Yeah.
And it wasn't sustainable. So what happened is that nowadays, instead of achieving financial self-sufficiency, you should be able, once you are able to achieve, your organization is able to achieve operational self-sufficiency, it means that it can go out to the market and get commercial loans to help you to enlarge your operations. And because of that, there are a lot of funding agencies who lend at a very low rate to financial institutions or microfinance institutions who operate much more better.
That is taken, Godfrey. But I just want to draw you to, very peculiar circumstances in Sub-Sahara Africa. Now, if you observe, most of the Sahel region and some upper parts of the savannah in Sub-Sahara Africa are not exactly, they might be rich in human resources, but they might not be rich in the financial capabilities to transform their natural resources into, the kind of wealth that their people need. So you might say poverty is endemic, and they are, in most cases, what they have available to them are, mostly the agric sector and sometimes mining. Okay, so let's look at a situation where a group of farmers come together, in one of such poverty-stricken areas of the Sahel in Sub-Sahara Africa. And they really desire to do maximum output of products throughout the farming seasons, and sometimes even do some things by irrigation. But they cannot get money from the, from the traditional banks. They cannot get monies from, most of the institutions that do lending at any reasonable rate. So it, seems to me at this point that one good place they can fall on will be the microfinance institutions. However, we find a situation where within these areas, the what you will call the probable persons who will set up these institutions are even not within those areas. They are out in the cities. So they more or less leave their people to, a state where they still have to be very traditional in the kind of implements they use and the kind of resources that go into the entire agrarian process. So it's rather a difficult situation. They are willing to work. There are no people who actually get up and say, you know what, let's put together the kind of funding that we can lend to you on periodic basis. You can pay back with a little interest, you know, and we just go on, you know. And then what that does essentially is that it increases the GDP of the country across board. You know, it makes the area more productive, and with the fallout effects, you know, that it has on, you know, the Human Development Index. So, my question again is this: how would communities, you know, in northern Ghana, northern Nigeria, northern Togo, northern Cote d'Ivoire, northern Benin, you know, most parts of northern Cameroon, you know, Chad, you know, and I mean, most of these countries that are, you know, we have a sizable part of the Sahel and Savannah regions, which we know that, you know, have high cases of poverty, so to say, and very low Human Development Index. How will these people, in your capacity as a financial inclusion expert, how would you, you know, advocate or formulate or suggest a formulation of policy that can bring financing to the doorsteps of these people to ensure that they actually, you know, become productive members of the society? And as I said earlier on, I'm speaking to you in your capacity as the Chief Executive of the Financial Inclusion Advocacy Center. And I just want to believe that, you know, these people are also within the remits and the purview of, you know, areas and institutions that, you know, you really want to assist or to educate or to bring resources, you know, to get them to increase capacity, you know, to do what they are doing in a better and in a more professional manner.
Yeah, so what we are at the moment trying to do is, from your example that you gave, you can easily see that most of these people are in the agricultural industry,
Yeah.
or the agrarian industry.
Sector.
So the sector, yeah. So what we're trying to do basically is, we are now coming out with a very, we've developed a very good concept called public-private community partnerships,
Okay.
which will operate within our cultural value chain.
Yeah.
I say, our cultural value chain has become a buzzword for some time now, over the past 5 years, but most of them have been developed and then they were not fruitful,
Okay.
or because of some lapses.
Okay.
So what Financial Inclusion Advocacy Center is doing is, we are coming out with a new concept of agricultural value chain.
Okay.
And the main component of it will be public-private community partnerships. Not the old public-private partnerships, no. Because we're also seeing that there are a lot of lapses with the PPP concept.
Right.
Here, we bring in the community as well. So everybody in the community is what? Involved.
It's a stakeholder.
It's a stakeholder.
Okay.
And then we all share the problem. So we have some items, so we have very good anchors in these public-private community partnership. That is boat to plate,
Okay.
and also farm to plate, whereby we help all the stakeholders straight from the farm up to the point the food will be on the plate of the consumer.
Okay.
We're looking at the farmers, we're looking at the providers of seedlings, we're looking at logistical aspect of it, like haulage companies, we're looking at the financial institutions. We're also looking at
it's a huge value
I'm
chain.
telling you,
That I can agree with you.
Exactly. So
Yeah.
that is what we are at the moment trying to help various governments to look at.
So let me ask you this: have you formulated a model?
Yes, we've actually formulated a model of which one came into the Business Financial Times last week.
Okay.
That we've been writing articles on in the various newspapers in the various
In Ghana here.
In Ghana here.
Great.
We are also going to replicate it in other countries.
Great.
Yes.
Great.
Yeah,
I mean, we would like to share excerpts of that with our viewers.
That would be great.
I mean, some of the excerpts of what you've written.
Yeah.
With the network. For them to be abreast with that. I mean, it's great to know you've come to the extent of developing models, and invariably, I believe that by this you want to strongly advocate certain policy innovations across Sub-Sahara Africa in the work that you do.
Exactly.
That is wonderful.
And we also have the Poverty Center, whereby we groom and incubate various models for poverty alleviation, especially among the teeming unemployed people in the various countries.
Okay.
So we do microfinance and youth unemployment. Yeah, how best microfinance institution could help these people to come out with bright business ideas and help them as well to with some startup capital, very small startup capital, and encourage them to bet it on. Yep.
Yeah. Let me ask you this.
Yeah.
As I just have two more questions for you, and then we're done. In your own estimation, what do you think the microfinance institution or sector can do to the development of Sub-Saharan Africa?
Microfinance industry can do a lot, or has been doing a lot in terms of development of Sub-Saharan Africa. It's it's interesting to know that microfinance industry is even much more potent than the aid that we receive from various international bodies.
Yeah.
You see, because the microfinance institutions are able to come to the doorstep of their clients, help them with finances, help them to structure their businesses, help them to market. I mean, some of the very good microfinance institutions, like the ones in Nigeria, I will not even mention names, but some of them are actually doing a lot of work, right from business incubation up towards marketing of the products.
What's the general response of the existing microfinance institutions to your services from the financial inclusion?
Yes, most of the we do a lot of work with various national bodies for microfinance institutions.
Okay.
In addition to the individual microfinance institutions in Sub-Saharan Africa.
Yeah.
You see, the problem with the individual microfinance institutions is they always think about the bottom line instead of capacity, what's the name, building capacity among their staff.
Yeah.
You see, so they are not able to innovate, they are not able to have, they're not able to think outside.
I like that word, innovate. I like that word, innovate. Because without that being at the back of in the consciousness of any business operator, they will remain the same.
Of course.
But I can attest to the fact that you rolled out great conferences, great training programs. I've been at your conference at the Angel Hotel, where delegates came from microfinance institutions from, I think, as much as 8 sub-Saharan African countries, and some of them doing very well, in the circuit. I remember the one from Nigeria, Lapo, that even has a branch in Sierra Leone, another in Liberia. It was, a great time, having all of them together, with the Ghanaian counterparts, counterparts from Liberia, Sierra Leone, and other countries, and also your training programs in Dubai, where quite a couple of participants have come. Some from Malawi. I've seen your participants from Malawi, from Nigeria,
Zambia,
Ghana, Zambia, and
yeah.
the rest of them. So I can immediately attest to the fact that you're actually making a great impact, so to say, on the sector. As a final question, I will ask you.
Okay.
What should the Sub-Saharan African region look forward to in the anticipated impact of the Financial Inclusion Center?
Oh yeah, okay. Within the next, probably within the next 2 years, what we really want to roll out is this our innovative agriculture value chain concept.
Okay.
In the various African countries, because we believe that once we're able to roll it out, it's going to help various governments.
You seem to be in love with a Greek.
Yes. You see, because with this COVID, the COVID has shown us that, has made us realize that agriculture is a way forward.
Okay.
You see.
We have comparative advantage anyway.
Exactly.
Right.
So what we're trying to do, we want to roll it out in various countries, and that will go a long way to arrest the teeming unemployed youth not getting jobs to do, and that's also going to help the government.
Great things for employment.
Yes, it's going to help the government a lot, and put food on the table of every person without the person going to ask for help from the government or other people.
So what we are looking forward to is capacity building.
Bringing out innovative ideas to microfinance. Microfinance is not just about giving out loans and taking out giving out loans and also getting savings, but you have to be innovative. You have to come out with very innovative products, and so that can help the people rather than just two products that you think you are cool with. Okay. Yes.
Yeah.
Yes.
So we can look forward to a great and a better Sub-Saharan Africa.
Exactly.
With the impact of the Financial Inclusion Advocacy Center.
Exactly.
It's been wonderful having you, Godfrey.
We also have a lot of fund managers that we work with who are willing to help various microfinance institutions in terms of funding, so that they'll be able to deepen their outreach.
Okay.
Yeah.
Okay.
Yeah.
So we can look forward to having the expertise and the assistance.
And one other thing is we also have financial inclusion. We also have a conference on financial inclusion, financial inclusion strategic conference in Dubai in September. Okay. Whereby, so it's going to be Asia Africa Financial Inclusion Conference. Yeah. Yes, in September. So we'd like to people who are going to listen to us to and book it.
That's when? What's the date?
In September.
When exactly in September?
I think it's 16 to 19 September.
In Dubai?
Yeah.
I know you hold quite some training programs in Abuja and in Lagos also.
Yeah.
So I guess it's an all-encompassing drive, to strengthen financial inclusion all over the world. Thank you so much, Mr. Godfrey.
Thank you very much.
Krentil. It's been great having you on this program.
Thank you.
And as I said to you viewers earlier on, it's taken me, the better part of 2 months to get him on set. But it's good it happened all the same, because this is just the first, I believe, in a series of discussions we're going to have. After this time, we're going to have Godfrey come again to, give us some of the basics, especially about setting up microfinance institutions. I would like him to give us a step-by-step approach, which I'm sure that many small, medium-scale operators have been looking for such information, to not only take their personal businesses forward, but also to take community businesses forward. And that will be our great joy on Kokuza Africa, to come to you with this information. So thank you so much for being with us, and certainly keep subscribing and keep watching, the videos as they come, and at any time, visit the website. And if you have any contributions to make, do kindly make them. Send us mails and let us know how we can better serve you and change the narratives of Sub-Sahara Africa. Thank you so much for being with us on this time.